Time to see what's on the radar for Ryan Bushell, CEO and portfolio manager at Newhaven Asset Management. And Ryan, Brookfield, or various parts of Brookfield, is what you're paying attention to right now.
Yeah, so I think when I was on Market Call in December, I spoke about Brookfield Infrastructure and how the spread between the corporate units, which is just a fund that's incorporated in Canada and New York, I believe they have dual listed, that holds the underlying partnership units, and that's for corporate governance reasons for institutional investors, where a lot of them are not allowed to own the partnership units and they own the corporate structure instead. And so what that basically says is that the smart money, in quotation marks, that is valuing Brookfield on the corporate side is valuing at a much higher level than Brookfield Infrastructure than the partnership units, which are largely held by retail investors and largely held in Canada. So it seems to me that there is an opportunity to buy the partnership units, especially as a Canadian, especially in a registered account, at a major discount, get the exact same thing, higher yield, with the thought that that spread might be closed. And so lo and behold, and we own both of these companies, Brookfield Renewable last week announced that they are doing an at-the-market equity issuance of $400 million of the corporate units to buy the partnership units. So basically that's almost like a share exchange or almost an acquisition. Now, because it's an at-the-market, it didn't get a huge response. If it was a bought deal or something where the money was actually bought and paid for by the institutional community to go out and buy that, then it would be a little bit different. But I still think the spread is really wide. The spread on Brookfield Renewable units, you see here, they're about $38. The corporate units are closer to $50. So wow.
What's driving that spread?
Again, especially on the renewable side, there's been a lot of negative press on renewables, but actually, if you look at what Brookfield Renewable is doing with the nuclear side of their business, institutional investors are looking for any type of exposure to nuclear, and Brookfield Renewable owns a majority stake in Westinghouse. So I think that's what's driving it, is you've got this disconnect of people look at the retail community is looking at Brookfield Renewable one way, the institutional community is looking at it another way. And to me, again, it's rare that you have the smart money paying more for something that you can buy as a retail investor much cheaper. So I think it's a good opportunity.
And you're pretty confident with that announcement. Did they move after that announcement?
It moved a little bit. The spread came in about 2%, but it's still historically wide. So it was about 42% premium to the units at the peak, and now we're sitting sort of 38. So again, you're looking at a 5+% distribution yield, and if you're in a non-taxable account, you don't have to worry about the tax consequences of owning a Bermuda-based limited partnership. It just all goes in as your dividend return or your distribution return. Whereas on the corporate units, it's about 3.79. So you're getting, again, like a major yield pickup, plus the fact that that spread should close in your favor, or at least you've got less downside if and when things go the other way. So you're protected by the yield, and you're also protected by the fact that you're trading at a big discount.
Okay, what are some of the things that would bring them closer together, and what are some of the things that might drive them further apart?
I'm surprised how far apart that they are. So the thing that would drive them further apart would be, again, just more enthusiasm from the institutional community about these companies and not being reflected by the partnership units. To me, again, like even outside of the tax consequences for the distribution being slightly more taxable in a taxable account, I think people should start buying the units, and that spread should close. Like it's one of these things where it's sort of like a structural issue of either people don't understand it, or they're just not willing to, they can't go there. The institutional community can't buy the units, right? They're just, a lot of them just not allowed, full stop. So the spread has persisted, but it's been as low as 2 or 3%, and now it's 40. So to me, that's pretty rich. And again, that when Brookfield comes out themselves and says, "Hey, this is too wide, we're going to start leveling this off," again, I think that bodes well for the unit holders.